Happy New Year's to all of our listeners. It's January. We're recording this podcast. It'll probably come out in a couple weeks, so I think it will still be January. And January is a season, right, for setting New Year's resolutions. And so here at Tricord, we want to talk about the vision that you, our listener, are creating for 2025 and what's informing that vision. And most importantly, what to consider when planning out your investments for 2025. So let's kick this off by talking about what's our vision for investments in 2025.
Yeah. And this relates, I think, a lot to a question that people ask. Hey, where should I put my money this year? What should I do next? 2024, for a lot of people, was a phenomenal year. They had so many good returns. They had so much good investments. So they ask, what's next? And
I think a lot of that vision. 23 too, right?
Right. Yeah, 23 is a great year. 23 was great. 24 was great. And people asking, what's the next wave? Where should I put the money? And I think I like your start off, Laura, saying, what's the vision for this money? And not just for you. I mean, part of it's your own personal vision. Where are you trying to get? But a lot of it's also saying for this account, like, is this money that you're going to use to buy a house next year? Well, then what you invest in is a little different. If you say, this is money that is for my retirement. I want to make sure in 10 years when I retire, this money is ready. Or to say, I'm in retirement. I'm living off of this money every day. I just need it to keep growing. I don't want to lose it. So the first question I would say for the vision is, is this a one vision for everything? Is this your master vision? Or is this even like a vision for this pool of money?
Short-term and long-term vision, right? Kind of aligns with our investment strategies as well. What's the short-term use of this cash and what's the long-term use of this cash, right?
Yeah.
Well, again, I think what clients look to us to do is to help them with their expectations. And we've come off 2 really good years of returns. I think a lot of people didn't expect that the Magnificent Seven would do as good as they did for 2 years running.
Yeah.
I think a lot of people were surprised by that. And of course, our clients, they really benefited from the rise of those particular tech stocks. But the question is, will they continue? And do they want to have that same concentration in the portfolio? We've already determined that there's a lot of compression going on. And the earnings on these particular companies or the valuation of these particular companies is probably reaching pretty close to a peak. And we've already started to back away from, the amount of money that we're investing, the percentages that we put towards those. But at the same point in time, I don't think we can expect 20% plus returns again for 2025. That's my take on it.
And as an advisor, right, it's a conversation that we need to have, both with our clients that have been around for a long time and those that are just recently starting to work with us, because worst case scenario is they onboard and they see some ups and downs that they're not prepared for, right? That is the nature of participating in the stock market. And there's going to be economic cycles that turn. And I think to your point, Dad, about trying to assess whether or not the Magnificent Seven, their valuation has hit a peak, if we're close to it, if we're still far away from it. I think there's a sentiment out there that we're living on borrowed time, that these Magnificent Seven have returned such fantastic returns for 2 years running. How could they for a third year? So,
right.
Yeah. And we don't see the markets. I mean, generally we look at them, we don't see the markets as being, wrong in the sense that they're out of whack. They're a huge bubble. We see them as representing, all the available information. And from everybody knows, hey, these are some of the best companies out there, these 7. However, that unexpected run that they've had the last 2 years and outperforming everybody, I agree with your sentiment like that may be slowing. And there's a lot of other companies who are starting to incorporate AI, be more lean and mean, and have great earnings to support some of these valuations. So we're not scared of the market here, but I do think it's a fair question to say for any of our clients, as we talk to them, like, is there anything else we need to add? Is there anything else we need to diversify? Is there anything else we should be talking about that is not just the market, but also other investments?
Right, a need to rebalance, right? I think this is true of any portfolio out there. If you start to get, a tremendous amount of growth from a certain amount of holdings, right, we want to look to rebalance those because diversification is still key to bring down risk overall. And is there an opportunity with small caps this next year?
Maybe.
Yeah, small caps tend to be more sensitive to kind of Main Street, what's going on in the actual economy, not just the markets. And a big thing that we talk internally as well as a lot of clients is January, February, March of 2025, as we walk into this, we expect there to be a lot of volatility, and not necessarily the markets move, in a major way one way or the other, but with a new president coming in, new policies, rolling out, man, there's going to be a lot of uncertainty. And whenever there's uncertainty, you'll see a day where things are up, a day where things are down, a day where things are up, as the markets are trying to process through. And some of these small caps, maybe, some of them may be the extreme. They may be up and down. Others may be a little insulated from that to say, well, whatever the market's doing today may not impact what their actual sales are on Main Street. And they may be more stable. So it's a hard one to see. We, of course, like diversification, just like you said. We want to have some in small caps. We want to have some in large cap, different types. But it's an interesting bucket, I think, especially this next year, as we're expecting to see some choppy seas ahead.
Yeah,
Right.
I think the key there is that you don't throw out the large cap, because the large cap growth stocks are still going to be your growth vehicles for the economy. I don't want to be Dorothy walking through the woods, lions and tigers and bears. Oh my. Again, at the end of the day, you can create your own risk just by your imagination. Bottom line is, these companies that are well suited, not only here in the United States, but worldwide, they will continue to make profit. Now, again, the political upheaval with Trump's election and such, his way in which deals with the day-to-day, the political scenes, his rhetoric creates volatility. It's just part of the way he talks. He doesn't think first. Well, he probably does. I mean, at the end of the day, I think Trump knows exactly what he's doing. He wants a reaction, and he responds to that reaction. He wants people to kind of wait. But it does kind of throw things. I mean, when he first became the president, we saw a jump in stocks. There was a great deal of anticipation that he was going to be very pro-business.
Enthusiasm, anticipation.
Yep. And that has waned now, because they're digging deeper into his policies, and they're looking at his appointees to his government. And there is going to be some response to that. And I think we're seeing some back off on that right now.
Right. There's anticipation that there's going to be less, regimen, less restrictions on corporations. Right. And I think that was the natural response from the market. But, I respond often to our clients who question what's going to happen, what direction are we going? Like, let's look at what Trump does, because does he deal in sensationalism? Absolutely, right? He's an entertainer, right? He knows how to draw out people's emotions. And so we're going to continue to see that. And we're probably going to see the market respond to that as well. Consumer sentiment, et cetera, is going to respond to that. But overall, let's look at what he actually does while he's in office. And that might give us longer term indicators of the market.
Yeah, so I mean, the next will be the early 2025 is when he actually gets in to be the president, and his people that he's nominated and he's put into his cabinet and such as that. What are the specific policies regarding tariffs and tax cuts and deregulation? That's where we get into the meat of it, and we start to see the benefits and or the harm that potentially could be posed by that next level. And we're not going to know about how that's all going to be fleshed out until we get to probably the end of April or May. So I think we're going to see volatility as we go through this first phase, as we go into that.
Yep.
Right.
The other volatility to add to it, and the reason that we're advising people don't put all their eggs in one basket, is just international. Our presidency impacts international, but there are wars going on. There are rumors of potential more wars. I mean, there's a lot of political upheaval around the world at the moment. And what that might mean, that could mean that things just persist as they are with uncertainty. It could mean some major events, and that uncertainty, then how does that track back to our U.S. stock market? Correct. The international.
Yeah, there's uncertainty, but there is still opportunity there. And I think we were talking as an investment team a couple days ago about India, Japan, some of these other more developed markets. India continues to have a really strong workforce and potential going forward. There are some international holdings that we're taking a look at and will probably show up in some way, shape, or form in 2025 that maybe weren't there this previous year. So,
and I think it's a good comment to make people listening to us. We are not opportunists. We're not trying to select the primary stock that's going to give us the return. We're not that kind of investment. We're looking at a diversified portfolio that will give us a blend and will give us a balance as we go forward. And we're looking at a mix of different companies and what they do, and we're constantly evaluating. Now, again, I think the primary thing that we're concerned about is that if we get a new client and they just have their money in what we call a standard classification, like an S&P 500. Well, if that classification has not been rebalanced, there is more of a concentration to Magnificent Seven, the high-tech stuff, and it's got kind of out of balance. So that needs to be restructured so that you restructure that weight of those particular stocks and get more to the bonds, because you can get completely out of balance by not doing anything.
So bonds, let's talk about bonds for a second. So bonds were actually, I know it's your favorite, that's why I brought it up. So last year we actually saw more volatility in the bond market, primarily having to do with the change in interest rates. And this could be an area of opportunity in 2025. Bond market is very compelling right now. It's very interesting.
So yeah, I mean, the bond, of course, is the longer term bonds are still very volatile, and you want to be careful about that. But in the collateralized bonds as well as the short term bonds, we're seeing really good returns. We're seeing 5, 6, 7% in some cases. But you have to be very selective of what kind of bonds that you're picking. And there's a lot of ways in which you judge the quality of the bond that you're taking. And I think probably one of the most critical ones is the longevity. It's the maturity date, because we see interest rates adjusting. Most likely they'll come back down, but it's tied to what? It's tied to inflation.
Yep.
Right?
Well, and the price of bonds, right? Interest
Right.
rates drop, your price of
Right.
bonds is going to go up. So they're always inversely related. Little rule of thumb.
Yeah. But I mean, again, the interest rate uncertainty is going to have a major impact upon the value of bonds. So you don't want to be caught going after something that's giving you a higher rate of return, then all of a sudden the bond value drops dramatically because, there's been an adjustment in the economy regarding interest rates. So you have to be very careful about that.
And bonds usually move very slowly, the changes in interest rates, the adjustments. But over the last 6 months, we've seen some major moves in the bond market.
Very
And
much.
to see a 1% change, historically took a long time for bonds to get there. Well, we saw a 1% change, roughly the last 6 months in some of the bonds, the treasuries. And it's a time to stop and take notice, to say, hey, this could be a great opportunity. This could be a great risk. And again, that idea for balance. Randy, to hark back to what you were saying just a moment ago, man, if someone was listening and you have not rebalanced your portfolio in the last 2 years, it's been on autopilot. You've just been going, man, you need to talk to somebody, because I am fairly confident that if you've not rebalanced the last 2 years, it's been on autopilot. Your portfolio may not be what you think it is, for one, and two, it may not be in the best position to go into 2025. I mean, we've had some phenomenally unique years. 2022, 23, and 24 have all been unique. And so whatever portfolio you had at the beginning of that series, I imagine for most people, it doesn't quite look the same. And that might be good or bad. And it's a really good moment before we get into some of the developments of 2025 to consider, do I need to get rebalanced? Am I leaning to the left or to the right in my portfolio? Is there an unknown risk here? So if you're in that boat and you haven't rebalanced in the last 2 years, it's really a good moment to talk to somebody.
Now is a good time to do it. And just to reiterate, and Dad, I think you'll echo this too, it's not a time to get out of the market, right? That's not what we're saying.
Not at all.
There are remaining opportunities. It's just kind of the rebalance, I think, is critical, because we've seen such tremendous high flyer gains in the Magnificent Seven, right? Diversification is still key. Let's look for opportunities in the bond market, small and mid cap, et cetera. But it's not a time to get out of the market, right? It's not that risky.
It is not.
Yeah.
I mean, people have a tendency to react, and so I can almost tell what they're listening to, who they're watching, by their comments that come out of their mouth. This is not a time to react to what you consider a good or a bad outcome politically. It is, you stay the course, you just have to rebalance. Another thing that we haven't talked about, some of the volatility is because of tax loss harvesting. And so that means that managers like us, we're part of that. We're selling off the winners right now. We waited until January 1st to be able to, to find those particular stocks, those particular holdings that we could take the harvest, because you want to take it at the beginning of the year, not at the end of the year. It's a lot easier to deal with those gains. But it also creates a lot of volatility in the marketplace, because you see a lot of managers across the board are selling things, right? And they're thinking, okay, this is bad. Well, it's not. It's probably because they're harvesting, and it creates kind of a downturn in the marketplace.
Well, let's talk about alternative investments for just a second here. We do hear often from our clients, is real estate a good investment? What about crypto? Should I still be buying gold? Right? So we've responded before about just gold and the de-dollarization. And we spent a lot of time in 2024 thinking through that and responding to our clients. So I'd love for this episode to talk a little bit about crypto and or real estate. Like what do we think about those holdings?
Well, real estate is it's time honored. And people buy real estate because they see the potential of appreciation. And if it's rental property, they want the income from it. The other two, gold and crypto, is purely speculation in my mind. Gold doesn't create any kind of income. And crypto is kind of what they call the, it's the gold equivalent. And I'm suspicious of both of them because of what's going on in the world. I think central banks, because they can't get in and buy U.S. dollars as much as they'd like to, they're buying gold and they're buying crypto. And again, the central banks aren't buying crypto, but it's the individual investors. It could be setting themselves up for a huge fall, a huge disappointment. And again, I have a personal opinion. I'm sure over time, we're going to see what the future holds. But I've had a lot of conversation with clients, and some people who push back on me says, well, I think we should be buying gold. I said, no, we should not be buying gold. I'm not seeing gold become the absolute performer. It may have times within a given, like a year or something like that it'll do well. But over the long haul, it is not something that I would put my life on and my investment life into it. And crypto falls in that same category.
Yeah, the key thing we see with gold, just candidly, is that we have folks who buy gold. We have very few folks that sell gold,
right?
And that's not just because the prices are high at the moment. It's over time, and so a lot of folks end up buying gold. They buy it. They're excited they have it. They have it for a rainy day, for a hedge, for all those good reasons that that they think it's useful. But very seldom, like right now, the prices are high. We see a lot of people coming in saying, "Should I buy more because the prices are high?" We have very few people saying, hey, the prices are high. This has been a good bet for me. I'm going to sell my gold and take my profits. Very seldom do we see that. I think that's an odd aspect of gold. Often there's a lot of buyers, and when they go to sell, they don't often sell. So that's one thing. But crypto is interesting. I mean, there's so many different opinions on crypto and what that's doing. I think from our firm, when we look at it, and echoing Randy's comments, what's the underlying intrinsic value? Beyond just everybody saying, we think this is good for the moment. What are we holding on to? What's this going to produce? What income will this make for us? And I think a similar concept to gold. I think people buy it when it's low. I don't know how many people are selling crypto when it's high. And there's traders, of course, people in and out. It's a little easier on that run, right? It's a little easier to sell than gold is. Gold's often physical. But I think there's potential for the future. I think people having a 2-3% of their portfolio and something like that doesn't bother us. I think that can be reasonable, but it's often not something that we're seeing clients really enjoying the value of that, or actually realizing the benefit of that.
Yeah, I think everybody still feels like this kind of like, ephemeral currency that it's like, am I, what? And so for those who get it and who've been early investors, like there have been some great returns there. I thought that article, Dad, that you and I shared was really interesting. I had never heard about that time period in our history where, you're going to share this more accurately than I am, but essentially banks, in order to protect the US dollar, were actually seizing gold because they saw that as a competitor currency.
So from 1933, that was in the depths of the Depression, the Federal Reserve said, no, we don't want U.S. citizens to hold gold. They literally seized all the gold. The people that had gold, they had to sell it back to the government, and that stayed in line until 1979. So that means people could not buy gold, could not hold gold, not buy gold until 1979. They did that because they didn't want their currency. They didn't want their currency kind of compared to a gold standard. So they took it off, right? And central banks, they're powerful. They're powerful, and they can move not only like this situation. This was almost 50 years that nobody could own gold. Yeah. And all of a sudden it popped out and gold jumped from like $32 an ounce up to where it is right now over time. And it had a dramatic, but it never threatened the currency. Now crypto on the same narrative, this is what bothers me about crypto, is they believe it's the new currency. And at the end of the day, that's not going to happen. Central banks will slap crypto down like a fly with a fly swatter because it's very small, and they're not going to allow some nuance to come along and threaten the overall economy of the central banks. It just isn't going to happen.
Interesting sentiment. Like, what would our government do to protect our currency? So I just think it's something to take into mind. We're certainly open. We've got several clients that hold crypto. I think it's an interesting marketplace to keep an eye on. Even the associated and complementary industries that have kind of come up around crypto, I think are interesting. We've talked a little bit about real estate. I think it's time just to segue. I know we could go on and on about our vision for investments in 2025. But I think generally too, we just want to talk to our audience about a vision. Let's talk about alternative investments. There are other things beyond just these commodities that we've been talking about that are important in 2025. And January invites a moment of reflection where we get to talk about our values and the things that are really important and actually top of mind to the three of us today. We're based here in Southern California. There are fires that are affecting our families and our clients, and we're thinking about their personal safety. We're thinking about their families. And so, not that we always want to come at it from a negative perspective, but I just want to kind of take these last few minutes of this week's episode to talk about some key questions that can lead us and guide us towards creating a vision, a renewed vision, and not just for 2025. It might go beyond that, but I jotted some down here, and I'll just mention a couple of them, and then feel free to chime in for any things that are really effective for you guys to create vision. But out of introspection, like looking back, where were you a year ago, and where are you now? Do you enjoy how you're spending your time? And this is a question that we bring up often. Are you happy with how your money is being spent? Right? Does the way that you spend your money align with your values?
Are you concerned about the future that the economics are uncertain? And I think that's really important because you're trying to build financial stability, not unstableness and uncertainty. Right. And I think that's a lot of what we do with our clients is we create that stability for them.
Yeah. I think what I would add in there, are you happy how you feel about your money? Some people worry about their money. Other people just have this constant frustration. Hey, I'm not here, I'm not there. Or, I never talk to my spouse about money because it just starts a fight. Like, how do you relate to money? And is that something that you are excited about? And if it's not, inviting somebody into that conversation. We sit down on a regular basis with married couples, even multi-generational, grandparents, parents, and children. We sit down and we talk through, money and how we relate to money and what the purpose of, money for a certain household is. I think it's really important to address the, how are you spending your time? How are you spending your mental energies? But also, how do you feel about your relationship to money? Like, you're going to relate to money for the next, decades and decades as you go. So it's worth putting some time in to really get a healthy relationship to how you and potentially even your spouse relate to your own finances.
And let's go beyond that. Like, we just recorded an episode on financial principles for your kids. Like, in the time that you spend with your kids, I don't care what age they are, there is something at their age level that you can communicate to them about financial principles and values.
Yes.
And I think that's an opportunity that a lot of parents don't take advantage of, maybe because their own relationship with money is not in a place where they want to share it. So, that could be a part of your vision, is how do you move your relationship with money forward and in such a way that you can impact those around you?
Yeah, one of the comments that I constantly make to clients is that money should not be a weapon. It's a tool. And if you know how to use the tool properly, you'll be able to do really good things. But as soon as you look at the money as a weapon, in other words, you take advantage of relationships in some way, and it always ultimately end up have a bad outcome.
Mm-hmm. All right. Well, that about wraps us up. There are more questions that you can ask yourself to develop vision, but we hope this episode was impactful in terms of not just creating investment choices for 2025, but overall, what choices are you doing to create vision and move your financial life forward towards financial freedom and independence? But if you have questions, if you're stuck, come talk to us. We'd love to sit down and get to know you better.
Until next week, folks, may you grow in wisdom and knowledge. Thank you for listening.
We have a few more things to let you know about before we go. Podcast reviews really help us to serve more people and get this information into the hands of the people who need it. Please leave us a review. Even if it's not 5 stars, we welcome the feedback.
And we invite you to let us know what topics you would like to hear more about, or what would benefit the people in your life who you're closest to. We have more resources online. Those resources are designed to help you share this great information easily with people in your life. To access those resources, please visit tricordadvisors.com.
Often we hear from clients that they wish they had talked to us sooner. If that's you, we'd be thrilled to see how financial planning can benefit your life. Email us at contact@tricordadvisors.com or simply click on the link in the show notes.
This show was produced by Graham Gardner at Model FA. Find out more about how to create a podcast for your financial planning business by visiting modelfa.com. We love creating content that's useful, resourceful, and maybe even a little entertaining. We want to make this mega universe of financial topics and advice applicable and helpful to your life.
Remember, at Tricord Advisors, we are your future's best ally.